Well, CNBC and Statista have launched their report on the world's top 200 fintech companies today. Statista used a rigorous method to pick fintech firms, evaluating more than 1,500 companies across 9 different categories, from neobanking to digital assets, using more than 10,000 data points. I'm really happy to say that Browne, CNBC tech reporter and co-author of the report, joins us now. Good morning to you, Ryan. Wonderful that this report is out. Just give us a sense of what the top-level findings were. What did you find? What stood out to you the most?
Sure. Yeah, thanks, Jemana. So, the top findings of the report, you've got the US with the bulk of the companies. 65 of the top fintechs globally were based in the US. Companies like PayPal and Stripe, clearly showing the massive market that the US is in terms of fintech. The UK was a close second with 16 of the top 200 names globally, names like Monzo, Starling, Revolut, some of the big neobanking players there. Germany and France trail behind with 10 and 8 respectively. But the second big finding that we found was that the challenger banks and the sort of consumer apps, the first wave of fintech, there's been a big migration away from those big players to much more niche areas of the financial chain, like compliance and security and know your customer. And then third, more and more non-financial players are getting into the finance space as well. In China, you've got Ant Group and Tencent that are represented on the list here. And it kind of represents a bigger shift as well from the US tech giants getting into finance as well.
I tell you what, I'm not that surprised that US is number 1 on this list geographically. Number 2, the UK. That is quite interesting. And I read a statistic somewhere showing that about 50% of VC funding does actually go towards fintech. So that gives a bit of a boost to the sector. But what is it about the UK ecosystem that allows these fintech companies to thrive, you think?
Yeah, it's a good question. So the UK has kind of built up a big fintech ecosystem over the past few years. You've seen, VC investment is pretty present here with big names like Atomico and some of the other funds, Balderton Capital as well. And it kind of represents a big push from the FCA and the regulator to make sure that fintech is a big deal here in the UK. You've got the FCA sandbox, which allows companies to offer products within a controlled environment before they go out commercially. You've also got digital adoption in the UK is really strong. Over 90% of UK adults use online banking day to day. And then the hurdles to starting a business are pretty low as well. You can start a new company in a matter of clicks. You've got big incentives like the EIS and SEIS investment schemes to launch new companies and get that funding. So the UK's got a lot going for it. There's also ambitions to be a crypto hub as well, to kind of bring digital asset companies as the new sort of form of financial innovation as well. So there's a lot of things going on here in the UK.
Browne, it was very interesting in the report to see that while we all think that China is the innovation hub of the East, that there were more fintech companies from India on the list than from China. That just threw me off.
Yeah, it was a really interesting finding. So India had some of the biggest names in payments like Paytm and PhonePe. And these companies are ones that just kind of like pervasive in terms of the sort of online payment space within India. I think you've got a few ingredients in India that make it, a contender with China. You've got the UPI payments interface where it's much easier to make instant transfers between individuals and in-store as well. So there's a lot of things going on in India that make the overall kind of fintech space quite built up. And you see initiatives from the RBI as well to make sure that the fintech sector is quite prominent in India. But it was an interesting finding. But China as well kind of holds its own. You've got big names there as well.
Ryan, well, stay with us. Let's bring in one of those companies in the top 200. Really happy to say that Thomas Cutter, the CEO of Xeon, joins us down the line. Good morning to you, Thomas. I'm sure you were just listening in on the conversation we were having with Brian. First of all, I just want to start off by asking about your own business. From what I understand, your company focuses in battling Russian sanction evaders. So 2 things come to mind. Obviously, number 1, extremely challenging by definition. And number 2, you must be relatively new.
Good morning, and thank you for having me. Yes, indeed. We also offer anti-money laundering services. So what we are building at Xeon is an anti-fraud API-based platform. We can detect suspicious customers as well as people who are trying to evade sanctions and are present on politically exposed people's lists, sanctions lists, crime lists, watch lists, etc. So we offer this service to small, medium, large businesses and try to do it also in a very product-led vision. So we offer a freemium model too.
The landscape for fintech companies has become a lot more competitive, and we're also in a rising interest rate environment. How challenging has it been for you to get access to capital in this more competitive landscape?
Yes, so last year was about the crash, zero funding available for most startups, and closed IPO markets even made it harder. Hiring freeze and layoffs, all these components actually led to become more efficient as a startup. So we were lucky and actually raised before the whole macro environment kicked in earlier last year, a 94 million Series B round. Today, funding available for only offensive deals, and all startups need to scale to IPO and invest in high ROIC projects. So this year is really about efficiency and scale for us as well.
Hey, Tomas, good to have you on. One of the findings from our report was the rise of non-bank companies in finance. And obviously you have some implications there when it comes to the existing financial incumbents. I mean, what do you make of the trend that we're seeing with these big tech giants now getting into financial services, and how do businesses like yours, like those infrastructure companies that are in that space, how do they kind of stand to benefit as well?
Yeah, I would say that new entrants like tech giants such as Google and Amazon are making inroads into the financial industry, as well as Amazon has just launched their own fintech accelerator program. Google is also making partnerships with different payment processors. I think it's a natural step of their evolution. Basically, the whole idea is to build super apps or close to super apps, like we can see in China with WeChat. But I would say that these tech giants and incumbents are trying to cover the whole payment flow. Today, most of them are using different third parties and middlemen in their payment processing and also customer lending and other financial applications. So I would say for them, it's really just natural to actually start to make tighter partnerships and alliances and actually build products themselves in order to cover the whole flow of payments and actually solve the main customer pain points. We can see this as like friction in payments. This is something we can help with, and that's why we are also partnering with some of the largest fintech companies out there.
The report as well has a lot of names, and I can't help but get the sense that we're a bit over fintechs at this stage. You have so many different challenger banks, so many different financial infrastructure providers. And like Jemana mentioned, with the high interest rate environment, now you're kind of getting a lot of pressure on the sector to consolidate. What's your outlook for the fintech industry going forward? Do you see a consolidation as a big trend going into the second half of the year?
Yes, exactly. I think this is something that started to progress since the last 12 months. So as a business, you don't want to work with 14 different vendors to solve one single problem. And also, as every business is trying to be more efficient, they try to save cost. They try to use one vendor instead of a number of different vendors. So that's why we are also acquiring other businesses. We have just acquired an EML provider earlier this year to be able to offer complementary services and cover the whole range of services that our potential clients and existing clients are using different vendors today. And 80% of our customers are regulated entities, so they do need to conduct know your customer verification. So that's why we are also looking at different ways to expand our portfolio and offer all the different services that's needed to be compliant in fintech.
Thomas, hi, good morning. Tanveer joining in this conversation. What is your ultimate ambition with Sion? And is a scale to sell a possibility? I'm thinking if you're expanding your portfolio and, there's obviously the market is getting more competitive. So there's always a possibility of more challengers coming into the market. Would you be averse to a big bank buying you?
I would say that's not the ideal exit strategy for us. we have high ambitions to actually build a product which is unique and not part of something much bigger. So for us, the plan is to scale to IPO. We are still very far from that, and especially got even more far given last year's headwinds and macro changes. But for us, I think we have such a strong vision to build a product which solves all the issues for a fintech company in terms of compliance, fraud, risk, and etc. For us, IPO is the only way. So we have to get in the next 4 to 5 years.
Okay, wish you the very best, Thomas, with your plans. Thank you very much for joining us and giving us your take on things. And Browne, great debut. Thank you very much for that report. A lot of effort put in. I really appreciate you coming this morning and giving us the findings.
And definitely check out the report. It's up on CNBC.com. I just tweeted about it. So yeah, really fascinating stuff. Thank you.
Thanks, Jemana.
Great stuff. Browne, thanks.